Imagine a banking system where a rural farmer can apply for an AI-approved loan, right? And they have the cash deposited straight into their smartphone in under 3 seconds.
Right, which is incredible.
It is. But then imagine that at the exact same time, like 52% of the banks issuing those futuristic loans are basically sitting ducks for devastating cyber attacks.
Yeah, running on totally underfunded infrastructure. Welcome to the deep dive, everybody.
Yeah, welcome. Today, our mission for you is to really unpack a massive, pretty comprehensive stack of documents from the Bangladesh Bank, which, just so we're clear, is the Central Bank of Bangladesh,
Right.
along with a few other financial bodies. Because we are looking at a nation sprinting against a ticking clock here.
For sure. I mean, in November 2026, Bangladesh officially graduates from Least Developed Country, or LDC, status.
It sounds like a good thing, right?
Oh, it's a huge milestone. But it also means they lose, certain international trade privileges. They lose those protective economic buffers. So to survive in the open global market post-2026, their internal financial engine has to be, well, completely modernized.
Bulletproofed, basically.
Exactly.
Yeah.
And whether you're someone who tracks emerging markets every day or you're just fascinated by how money actually works, there's just an incredible story here about trying to rewrite the rules of a rapidly growing economy mid-flight.
Mid-flight is the perfect way to put it. So we're going to dig into the actual mechanisms of how this works. We're going to bypass all that heavy financial jargon, look at some mind-blowing data, and explore the massive structural issues and the solutions shaping the future of money there.
Yeah, let's get into it.
But, before we can understand the problems in the economy, we really need to understand who the players are. Like, what is the ultimate goal? Let's unpack this.
Good place to start.
Think of the central bank, the Bangladesh Bank, as the referee of a soccer match.
Okay, I like that analogy.
Right, because they don't actually play the game. They set the rules, they control the supply of the ball, which is the money, and according to the documents, they try to keep inflation under 7% with a 10% policy interest rate.
Right, and that policy rate is basically their whistle. Like,
Yeah.
if they raise it, borrowing gets more expensive for the commercial banks, so spending cools down.
Exactly. So the commercial banks are the players on the field. They're the ones interacting with the fans, the everyday customers, taking deposits, and giving out loans to score profit.
Yeah, but to score, you need players on the field.
hmm
And the sources spend a lot of time on this idea of inclusion. But they draw a very, very sharp line between financial inclusion and economic inclusion.
Yeah, those aren't the same thing.
Not at all. I mean, financial inclusion is just getting the tool,
Yeah.
like opening a bank account or a mobile wallet. It's great. It brings you into the system.
Right, you get the app on your phone.
Right. But economic inclusion is actually using that tool to participate in the economy.
Yeah.
It's when you use that mobile wallet's history to get a loan, buy a tractor, and actually become self-reliant.
So financial inclusion is the starting line, basically.
Exactly. It's the illusion of success if you just stop there. You need people actually generating GDP.
Well, looking at the starting line, the data on mobile financial services, or MFS things like Bcash, Nagad, and Rocket, it's just wild.
The numbers are staggering.
Yeah. By March 2026, the documents show there are 238.6 million MFS accounts, and they are processing 1.72 lakh crore BDT in transaction volume, which, to translate that, is roughly 1.72 trillion taka.
Which is tens of billions of US dollars.
Exactly. And they did this largely through agent banking, right? Setting up over 20,500 outlets with 86% in rural areas.
Right. So instead of building a giant marble bank branch in a village, a local shopkeeper just gets a scanner and acts as the teller.
It's brilliant. And even better, 51% of these MFS accounts are held by women, giving them direct biometric control over their own income, independent of anyone else in the family.
Which is a massive social shift.
Oh, totally. But, and here's where I have to push back a little on those numbers.
Let's hear it.
You said 238 million MFS accounts, but the entire population of Bangladesh is only about 170 million people. So mathematically, giving everyone an app isn't the finish line, but how do we even have more apps than people? Are these just duplicate accounts? Why is the system actually struggling if the numbers look this good?
It's a really valid point. Because the ecosystem was so fragmented, a single user often had to open multiple accounts. You need one app for the grocery store, one for your agriculture stipend, one to send money to your family.
Oh, so handing one guy 3 apps inflates the user metric?
Exactly. It doesn't mean 3 times the economic inclusion. And that leads right into the dark side of this rapid growth. Because if financial inclusion is bringing people into the system, What happens when the money stops flowing properly?
Right. And the audits are very clear about where it's stopping. It's the NPLs, the non-performing loans or default loans.
Yeah, this is the core blockage.
And for anyone listening who isn't a finance geek, imagine you lend money to a friend who promises to pay you back monthly. If they just stop answering your calls for 90 days, that loan goes bad. In banking, that's an NPL.
Right, and under the new rules from March 2025, that 90-day mark is a hard line. Once a payment is 90 days overdue, it's officially classified. The money freezes.
And when the money freezes, the banks can't lend it to the next business. The data here is honestly terrifying. As of early 2026, 30.6% of dispersed loans are in default.
Wow, over 30%.
Yeah, it's roughly 6.44 trillion BDT just stuck. And state-owned banks are sitting at a massive 46% default rate. Private banks are around 20%, but still.
Yeah, that is a liquidity crisis waiting to happen.
Yeah.
And the reports, I mean, they impartially document exactly why this is happening. They point to totally inadequate vetting processes.
Yeah.
Banks just chasing excessive profits without actually checking if a business can repay.
Just handing out cash.
Pretty much. And they also explicitly cite political influence, like board directors and political leaders pressuring banks to approve massive loans to preferred parties.
Right. Just to clarify for you listening, we're not taking a stance on the politics here. We are just reporting what these official audits found.
Exactly. The sources detail how these loans go to shell companies, or to what they call willful defaulters, people who have the money to pay it back, but use legal loopholes to avoid it.
Which is just wild. But here's where it gets really interesting. Because the NPLs are only half the problem. The other half is the shadow economy. The Hundi system.
Oh, the Hundi system.
Okay.
Yeah, this is a massive drain on the official foreign exchange reserves.
So how does this actually work in practice?
Okay, so it's basically an underground money transfer system. It completely bypasses official banks. It dodges taxes, everything.
Yeah.
Say someone is working in Dubai and wants to send money home to Dhaka.
Right.
Instead of using a bank which brings foreign currency into the central bank's reserves, they give their cash to a local Hundi broker in Dubai. That broker just messages a guy in Dhaka, and the Dhaka guy hands local taka to the family.
So the actual money never crosses the border?
Exactly. The foreign currency stays in Dubai. The Bangladesh bank never sees it.
It's like a toll road. I mean, if the toll on the official highway is too expensive with all those wire fees and terrible exchange rates, people will just take the dirt road, even if it's illegal. The banks have to lower the toll.
That is exactly what the central bank realized. You can't just arrest your way out of a shadow economy. You have to make the official system better, which is why they are pushing so hard for a cashless society.
Right. The digital shield. They want to move away from paper notes entirely, using smartphones, Bangla QR codes, and systems like Binomoy.
Binomoy is huge for this. It's an interoperable platform. It lets you send money from any bank to any MFS instantly.
Breaking down those walls so you don't need 3 different apps anymore.
Exactly. It forces transactions into the light.
And there's a crazy stat in the documents about this. The government apparently spends roughly 20,000 crore taka every single year just to print and manage physical cash.
Just printing the paper.
Yeah. So going cashless just instantly saves all that money. But, moving everything to the cloud opens this terrifying new door.
Cybercrime.
Yes. Cybersecurity in banking isn't just a tech issue. It's the digital vault protecting everything from hackers, deepfakes, AI voice cloning.
And what's fascinating here is that the technology is advancing way faster than the bank's ability to protect it. I mean, they are issuing these instant AI-driven nano loans to rural farmers without collateral, which is amazing, right?
It sounds like science fiction.
It does. But the core banking servers are struggling just to handle the traffic, let alone secure the data. A study by the BIBM, the Bangladesh Institute of Bank Management, shows that 52% of banks are at a high risk for cyber attacks.
Over half of them?
Over half. And only 12% are considered fully secure.
That's genuinely alarming.
It gets worse. Only 11% of banks are even ready for AI threats. And shockingly, 27% of cybercrimes in the sector actually involve the bank's own IT vendors.
Wait, really? The people hired to fix the computers are the ones breaching them?
Or its supply chain vulnerabilities, yeah. It's a massive blind spot.
Okay, so let's zoom out for a second. We have the referee, the Bangladesh bank. They have a 2026 deadline. They're dealing with 30% default loans, a massive shadow economy, and half their banks are at high risk for cyber attacks.
It's quite a to-do list.
Right. So how do they actually clean this up? How do you fix the broken players on the field?
Well, the central bank isn't playing around anymore. They launched this massive 11-point reform plan. And the biggest hammer they have is bank mergers under the Bank Resolution Act 2025.
Okay, mergers. It's basically like taking a sinking rowboat and tying it to a strong, sturdy cruise liner. The strong bank absorbs the weak one to protect the innocent passengers, the depositors.
Right, and they enforce this using what they call PCA, or Prompt Corrective Action. It's a 4-tier warning system.
Okay, so how does a bank fall into a bad tier?
Basically, if a bank accumulates too many bad loans, they drop down the tiers. If they fall into Category 4, they lose their autonomy. They are forced to merge.
Wow, forced. No choice.
Exactly. And to keep the public from panicking while all this happens, they double deposit insurance to 200,000 BDT just to restore trust.
So if a bank goes under, your money is insured up to that amount?
Yes. And they're also mandating eKYC, which is paperless digital ID verification using biometrics, by December 2026. You can't just use a fake paper ID to get a loan anymore.
That's a huge step for accountability. And they are also using this cleanup to force environmental changes, right? Through green banking.
Sustainable finance, yeah. They're directing loans exclusively to projects that help the planet. Solar-powered ATMs, eco-friendly factories.
And if you're a textile factory dumping chemicals in a river, they just cut off your access to capital.
Exactly. They raised the target for sustainable financing from 20% to a massive 40% of all loans by 2025.
That is aggressive. But I want to go back to the mergers for a second.
Yeah.
Because tying a sinking rowboat to a cruise liner sounds great for the people in the rowboat.
Right.
But if we connect this to the bigger picture, what if it drags the cruise liner down too? I mean, these good banks are being forced to take on massive toxic debts from the bad banks.
That is the major risk analysts are pointing out. The good banks are effectively being penalized for being responsible. If you don't handle that ballast correctly, you sink the whole fleet.
It's an incredibly delicate operation.
It really is.
So let's wrap this up. We've covered a ton of ground today. From understanding the basic rules of the central bank versus commercial banks to the really heavy burdens of NPLs and that shadow Hundy system.
Yeah, and the high-stakes cyber battle of going cashless.
Exactly. Plus, this massive reform and merger cleanup underway right now. So what does this all mean for you? It shows that a modern economy isn't just about printing money. It's this delicate, high-wire balancing act of technology, trust, and really strict governance.
Absolutely.
A cashless society only works if the digital vault is locked tight, and the referees have to enforce the rules without any bias.
And, I want to leave you with one final thing to ponder here. As AI begins to, instantly analyze our transaction history to grant these nano loans in seconds, and as QR codes completely replace physical wallets, are we approaching a future where paper money, and maybe even physical bank branches themselves, will only exist in museums?
Oh, wow.
Right? What happens to the entire concept of money when it becomes purely invisible data?
That is a wild thought to end on. Just invisible data in the cloud. Thank you for joining us on this deep dive. We'll catch you next time.